What the heck is going on in the Denver metro real estate market? Hey, it's Sean Reddy, Keller Williams Reddy Group, and each and every month we bring you the latest stats for the Denver metro market, 7-county area, so that you know exactly how to tackle this market if you do plan on moving in 2025 or 2026, as that is right around the corner. So by the end of this, you'll know 9 key vital signs of the real estate market and how to leverage them in your favor, whether you're buying a home, selling a home, or selling a home to buy another home. So stay tuned to the end and we'll talk about how to use these stats, but let's kick things off with what the month over month looked like for October. We'll also talk about the year over year and how that's shaken out. And again, give you some tips to use if you plan on entering the market, either buying or selling a home. All right, so first thing, color coding. If the trend moved in favor of sellers, the color coding is green. If it moved in favor of buyers, the color coding is red. And you can see month over month, more green than red. And we'll talk about the biggest movers for the red are days on market extending up. So average days on market up 9.3%. Median market times are up 11.4%, and that's just month over month, reversing the trend from last month when they started going down, or at least even. Now, on the seller favoring trend line, new listings dropped by nearly 10% month over month, which purchase contracts also fell 2.8%, but in the net, the total number of available homes dropped by nearly 5% last month. That's the 4th straight month of falling inventory in the Denver metro. Some other movers, closed sales up minuscule amount. Looks like 6 more closed sales in the month of November compared to October. Good for a 0.2% bump. Now, price. Let's talk about price for a minute. This doesn't mean that values went up 5.4 or even 1.7%. This means that what closed in the month of October, on average, was 5.4% higher than what closed in September. Median close price also up 1.7%. And lastly, this is the metric that I call the leverage factor. It's the ratio between closed prices, median close price, and median last asking price before the home went under contract. And that number did go up by 0.7%, 99.17% median close price to median asking price. Now, that does not take into account seller concessions, which are very big right now. Think, thousands or even tens of thousands of dollars for things like rate buy downs. Does not factor into the close price. That's just the gross number. Now, what does that look like year over year? Let's go there next. And yeah, flip-flop, a lot of red when we're comparing year-over-year metrics with, again, the biggest movers being market time. Average up 25.5%, median up 30% year-over-year from October last year to this year. New listings down by 2.8%. However, available inventory, although it's down month over month, again for the 4th straight month, it is up nearly 14% compared to last year. So again, 7-county area. I know that's super broad. If you want these broken down for your specific market, just drop a comment. Happy to do that for you. But in the 7-county area last year, there were under 12,000 homes for sale. This year, as we get into what's traditionally the slower season, there's over 13,000 homes for sale. Again, good for a 13.7% bump in inventory. Both purchase contracts, leading indicator, and closed sales, lagging indicator, down. Purchase contracts down 2.3%, and closed sales down 1.1%. The average price is up, while the median price is down. Again, not super indicative of just real estate values across the board. However, what closed in October this year, on average, sold for 2.8% higher than what closed in October last year. Meanwhile, the median is down a whole $450. What is up, though, is that leverage factor. Sellers are getting closer to asking price. And this reason for that is most likely a more educated group of sellers across the board when it comes to establishing baseline asking prices. That's my theory. I'm sticking to it. Now, last thing before we sign off is we're going to look at a little bit more perspective, longer term. This goes back more than 3 years in the metrics that we look at. So you can see just, longer term. I started this in August of 2022. Reason is that's when the market really started feeling the effects of rising mortgage rates. So the first graph, this is average and median market times. And you can see peaks and valleys. That is true for probably every year in history, where the winter months see longer market times. And you can see that is absolutely continuing as a trend with both average and median market times on the way up. Now this one, I know this is, there's a lot going on here. Yet this, to me, is the most important graph when it comes to the overall health of the real estate market. And if we go back all the way to when I first started doing this, the red line, which indicates number of total homes available, was pretty darn close to the other two lines, which the blue one is new listings coming to the market. The yellow one is new purchase contracts in any given month. Then what happened starting last year? Well, yeah, we'll call it spring of last year is when that red line really started detaching from the number of contracts, meaning more and more homes were sitting on the market. I don't want to say less were selling, because you can see that yellow line is pretty flat overall, but just more on the market, making it a market literally of haves and have-nots as it comes to sellers. The 4,000 or so that were selling in any given month were a smaller percentage of what was actually on the market and available. And then that really took off this year. In fact, one month topping over 15,000 homes for sale. However, like we typically see at this time of year, total inventory is coming down. How low will it go? Well, I don't think it'll get back to those the yellow and blue lines. However, good steps if you are a home seller. You have a little bit less competition than you've had for the last few months. Closed sales, ups and downs, going into they did go up slightly month over month, but we are going into what's traditionally the slowest month of the year, which is January every single year. That's where those valleys are. This past month, 3,545 homes reached the closing table. And finally, I shouldn't say finally, two more, average and median closed prices. Now, if you follow mainstream media real estate news, you're probably being led to believe that prices are plummeting. And this 3+ year graph says anything but that. If anything, prices are up over the last 3 years, not much, but you can still see a general upward trajectory both in the average and median close prices. Now, lastly, the leverage factor that I mentioned. Typically we're going to see a range of, we'll call it 98 to 100%. And you can see there's some outliers where it's been up and over 100% of asking price. Based on the median sale, we're above 99% or were last month. And so, yeah, we're seeing some ebbs and flows there, certainly, but generally going to be in that 98 to 100% range. Now, there you have it. There's the month over month and year over year and longer term perspective on the Denver metro market. Again, huge geographic area, 7 counties, 3 million plus people. So if this is something that you would like to key in on a specific market or a town or a neighborhood, again, drop a comment. Love to hear from you. Love to geek out over these stats with you. And if you plan on entering the market, let's have a consultation about how these numbers at a more micro level, neighborhood level, can impact your purchase or sale. Happy to be a resource. Again, Sean Reddy, Keller Williams Reddy Group, and we'll see you in this segment next month.